Sometimes you don't have any choice because you need something fast and you don't have time to save up for it and earn money on your money that you're saving. And in those cases, you would need to take out a loan. Many times people take a loan for a car or for a house or almost anything in between. And essentially, if you use your credit card and don't pay off the balance every month, you're taking a loan from the credit card company. So when we take loans out, we have to pay interest to the bank instead of receiving interest from the bank or the credit card company, whichever. Um, so there are some terminology. So let's learn some terminology that credit card companies use and you may see on a credit card statement. And then we'll look at some credit card statements just so that you understand what is being presented to you there. And then we'll move on and look at some formulas for how long it'll take you to pay off a credit card, how long it'll take you to save money, and then a couple of loan formulas as well. The first term is the grace period, and the grace period is the amount of time between when you make a purchase and when the company, which I'll call the credit card company, whichever company you have, starts charging you interest on that money. And it's up to a month. And the way that that is so variable is that if you make a purchase on the first day of a new billing cycle, then you have a full month before you have to pay interest on that money. Whereas if you make a purchase the day before the billing cycle ends, you only get a day grace period for that purchase. So it just varies throughout the month. Usually they give you everything you purchase in the billing cycle. It doesn't have interest until after the bill for that is due. So the average daily balance is an average or a mean, and what the company will do is add all of your daily balances together for the billing cycle, which is usually about a month, and then they will divide by how many days are in the billing cycle. Again, usually 30 to 32 days, depending on the billing cycle. And so then you get an average of all your daily balances. The daily periodic rate is the annual rate, which is what they report to you for a credit card, divided by the number of days in a year, which they will always use 365. So then your daily periodic rate is going to be the APR for your account divided by 365. And that's usually expressed as a percent. And the corresponding annual percentage rate is that percent that they advertise for a credit card, like 7.99% annually, that sort of thing. That's the APR that you're going to pay for any charges that you leave on your credit card after the grace period has ended. So the finance charge, or it could also be called an interest charge, or the amount of interest owed, or anything like that, is the amount of money that is charged by the company for any charges that you leave on your account after the grace period ends, and actually after the bill has come due for your previous month.